You won't believe what just happened in the global currency market, and if you don't pay attention right now, you might miss one of the biggest financial turning points of 2025. So before we dive deeper, make sure you tap the like button and subscribe so you never miss updates that could genuinely change the way you think about currency movements and long-term financial planning. The sudden momentum in the Vietnamese Dong rate has shocked traders, analysts, and even cautious investors who were previously unsure about engaging with emerging market currencies. What we're seeing right now is a combination of economic stability, government policy shifts, regional trade competitiveness, and global dollar pressure, all merging at the same moment, creating a scenario that many experts had predicted might happen years down the line, not in the opening months of 2025. This sudden lift in the VND is not just a random spike or a short-term anomaly. It is tied to deeper structural developments within Vietnam's economic framework. Over the past few years, Vietnam has strategically strengthened domestic production, expanded high-value exports, tightened inflation control, and improved foreign investment regulations, and the impact of those decisions is finally showing up in currency value. As supply chains shifted during global economic uncertainty, Vietnam became an increasingly attractive manufacturing alternative, bringing in billions in new deals, and when a nation's export power grows, its currency naturally gains momentum. Add to that the rising confidence of foreign investors who see Vietnam as a stable economic environment compared to several neighboring markets that faced political tensions or inconsistent fiscal strategies. The result is that the VND is no longer being quietly traded in the background. It has stepped into the spotlight with a sharp upward movement that currency watchers cannot ignore. Even traders who normally focus on major pairs like US dollar to euro or US dollar to Japanese yen have started paying close attention to VND trends, because whenever a developing economy begins gaining traction, early awareness often translates into better financial decision-making. But the big question is whether this is actually the right moment to convert, or if the movement is too early in the trend to make informed decisions. Many analysts argue that the VND's rise is only the beginning of a longer trajectory driven by ongoing improvements in trade surpluses and consistent economic policy. Others caution that global uncertainty could create short-term volatility that might catch inexperienced traders off guard. The key is understanding what is pushing the rate upward. Stronger export performance, a more stable domestic currency environment, and declining dependency on the US dollar in regional trade networks. If this pattern continues, the VND may experience additional gains before stabilizing at a new, stronger baseline. As we explore this unfolding trend, it's important to stay informed about the nuances behind the numbers, not just the surface-level excitement. That's why watching until the end of this video will give you the clarity you need to evaluate whether conversion aligns with your financial goals in 2025. So stay with me and keep engaging, because this information could guide your next smart move in the currency market. The 2025 surge in the VND is especially fascinating when we compare it to other currencies undergoing their own fluctuations, such as the Iraqi Dinar, which remains at the center of speculation, rumors, and daily news cycles about potential revaluations. While the Dinar and Dong are often discussed in different contexts, they share one common element. They attract global attention when geopolitical or economic shifts begin creating openings for upward currency movement. What makes the VND's current trajectory so compelling is that its gains are supported by concrete economic data, improving financial transparency, and strong international partnerships. Vietnam has been enhancing its digital banking infrastructure, increasing trade agreements, and expanding regional cooperation, all of which create a healthier environment for a stable national currency. The government also continues to prioritize inflation control, which builds confidence for long-term investors who prefer predictable monetary conditions over high-volatility environments. At the same time, global pressure on the USD in 2025, driven by shifts in interest rate policies and widening fiscal concerns, is causing many investors to diversify their currency exposure. When major currencies face downward or sideways pressure, emerging market currencies with strong fundamentals often benefit, and that is exactly what is happening with the VND. Meanwhile, speculative markets continue buzzing about RV news and potential moves in the Iraqi Dinar, keeping the foreign exchange community closely tuned in. People want to know whether smaller, undervalued currencies might see a shift, and that curiosity drives massive search volume, online discussions, and investment inquiries. However, the difference in 2025 is that the Vietnamese Dong's rise is not based on rumors. It is based on measurable economic performance, showing clear upward direction. Investors see a country with rising manufacturing power, strong diplomatic trade relations, and a workforce that continues to drive productivity, all contributing to macroeconomic confidence. Additionally, Vietnam's strategic location and participation in major trade blocs mean the country is woven into global supply chains in ways that continue strengthening its currency outlook. As these developments add up, more analysts now believe that waiting too long before converting may mean missing out on the early benefits of a strengthening currency. Still, investors must remain cautious and avoid acting purely on emotion or fear of missing out, because currency markets always require balanced judgment. What you can do right now is keep gathering the right information, understand the historical performance of the VND, and track the geopolitical and economic factors shaping 2025 trends. Every smart currency decision starts with awareness, and by understanding how these dynamics connect, from USD movements to RV speculation to regional economic performance, you equip yourself with knowledge that puts you steps ahead of the average viewer. So stay focused, stay informed, and make sure you don't miss the final breakdown coming up next, because it may help you determine exactly how to approach conversions during this unexpected and dramatic moment in the currency market. Now that the VND's sharp rise in 2025 has become one of the most talked about developments in the currency world, it's essential to break down what this moment truly means for anyone considering conversion, long-term holding, or strategic diversification. The question people are asking, whether this is the right time to convert, depends on understanding the timing, trajectory, and sustainability of the growth we are witnessing. The strength of the Vietnamese Dong this year is not accidental. It reflects a country that has spent the last decade modernizing nearly every sector of its economy. Technology growth, manufacturing expansion, infrastructure investment, and increasing foreign direct investment have created a stable environment that supports a stronger currency. This makes the VND's rise feel more grounded than the short-term spikes we often see from currencies tied to speculation or political events. Meanwhile, global investors are paying attention because they see a pattern forming. Countries with rising productivity and growing export footprints tend to experience long-term currency appreciation. That means early converters often benefit the most, but only if they take action based on accurate, well-rounded insights rather than hype. Another factor adding fuel to the VND's upward trend is the global reshifting of supply chains. As companies diversify production hubs away from single-country dependence, Vietnam has become a primary choice, bringing consistent capital flow into the economy. This capital inflow strengthens currency stability and expands future growth potential. At the same time, pressure on the US dollar is leading many economies to reconsider how much they rely on USD-dominated trade. When regional currencies begin handling more regional transactions, it naturally boosts their independent value. Combined, these global and local factors make the VND's rise more than just an opportunity. It becomes part of a larger financial evolution in 2025. So, is now the perfect time to convert? The answer depends on how clearly you can read the current cycle and how prepared you are to make a calculated decision. For some, converting early in an upward trend could provide significant benefits, especially if the VND continues strengthening throughout the year. For others, waiting for more confirmation or a stabilization point may feel safer. What matters most is that you stay educated, stay alert, and avoid making decisions based on emotion or rumors. Currency markets reward informed action, not rushed reactions. And that is why staying connected to reliable updates, real financial analysis, and consistent reporting is critical in moments like this. Before you decide your next move, make sure you're subscribed, make sure notifications are on, and make sure you're part of this community where every update is designed to empower you with the knowledge you need to stay ahead of the global currency curve. And remember, your engagement helps push this crucial information out to more people. So don't forget to hit like, drop your thoughts in the comments, and share this with anyone who needs clarity on the 2025 VND breakout, because the next major opportunity might be just one update away.